Have you ever wondered how people buy and sell pieces of companies and how those pieces translate into real-world gains and losses? Congratulations! You are in for an enlightening treat. Welcome to a journey of financial discovery, where we're about to unravel the intricate workings of the stock market. During the 1600s, the Dutch East India Company utilized numerous ships for trading commodities like gold, porcelain, spices, and skills worldwide. However, managing this extensive operation was expensive. To finance their costly expeditions, the company turned to private individuals, people who could invest capital to back the journey in return for a portion of the ship's profits. This approach enabled the company to undertake even more ambitious voyages, leading to increased profits for both themselves and their astute investors. By selling these ownership shares in establishments like coffee houses and shipping ports across the continent, the Dutch East India Company unwittingly pioneered the world's inaugural stock market. From that point on, companies have been acquiring funds from willing investors to sustain a variety of enterprises. Today, the stock market has evolved into a realm encompassing education, careers, and entire television channels devoted to its comprehension. However, the contemporary stock market is markedly more intricate than its original inception. So, how do corporations and investors utilize the market nowadays? Consider a newly established coffee company venturing onto the market. Initially, the company will present itself to major investors. If these investors find the company promising, they are granted the initial opportunity to invest and subsequently sponsor the company's initial public offering or IPO. This thrusts the company onto the official public market, where any entity or individual believing in the business's potential can purchase stocks. The purchase of stocks entails these investors becoming partial stakeholders in the enterprise. Their investment contributes to the company's expansion, and as its prosperity escalates, more potential buyers might take an interest and begin procuring stocks. As the demand for these stocks surges, so does their price. This elevated cost deters prospective purchasers while simultaneously amplifying the value of stocks already held by individuals. For the company, this heightened interest serves as a means to finance new initiatives and augments its overall market value, signifying the extent of investment in their vision. Nevertheless, if circumstances lead a company to seem less lucrative, the opposite trajectory may transpire. Should investors anticipate a decline in stock value, they may opt to sell their stocks in anticipation of a profit prior to the company's value further deteriorating. As stocks are divested and demand diminishes, stock prices decline, consequently lowering the company's market value. This situation can result in significant losses for investors unless the company manages to demonstrate renewed profitability. The fluctuation between supply and demand is impacted by a variety of elements. Market dynamics, encompassing the variability of material costs, alterations in production methods, and shifts in labor expenses, inevitably impact businesses. Investors could possess apprehensions regarding changes in management, unfavorable public perception, or more extensive factors like emerging laws and trade strategies. Additionally, many investors are inclined to sell valuable stocks and pursue personal interests. These variables collectively contribute to day-to-day fluctuations in the market, which can create the illusion of heightened or diminished success for companies. In the stock market realm, appearing to lose value frequently leads to the erosion of investor confidence, precipitating an actual loss of value. The human element of confidence in the market holds the potential to trigger a spectrum of outcomes from economic upturns to financial crisis. Given the intricacy of this challenging to track variable, professionals generally advocate for reliable, long-term investment strategies over quick speculative gains. Nonetheless, experts continuously develop tools in an attempt to enhance their prospects within this highly unpredictable system. Contrary to popular belief, the stock market is not exclusive to the wealthy and influential. With the advent of the internet, everyday individuals can engage in stock purchases using many of the same methods employed by prominent investors. As more people educate themselves about this intricate framework, they gain the capacity to trade stocks, bolster businesses they believe in, and pursue their financial aspirations. The initial step involves making an investment. And there you have it, fellow financial explorers. Our journey through the intricate world of the stock market comes to a close, but the learning never stops. Remember, the stock market is a dynamic landscape where companies rise, fall, and adapt. Factors like market trends, technology shifts, and global events contribute to its ever-changing nature. If you found this video enlightening, don't forget to hit that like button and share it with your fellow explorers. And of course, if you haven't already, subscribe to our channel and ring that notification bell. We've got more financial insights and journeys ahead. Thank you for joining us in this enlightening adventure. If you're as curious as we are, don't miss out our videos on investing for beginners, the stock market, exchanges, IPOs, futures, options, and 10-day trading tips for beginners. These videos will help you expand your knowledge about the dynamic world of finance. See you!